All right, it is 17 minutes going past 5, and you are welcome to the marketplace on Smooth 98.1. And well, on the marketplace today, we'll be taking a look at Nigeria's debt as it crosses 50% of its GDP. And having this conversation with me and giving us more enlightenment on what it is and how we need to adjust or, hey, look forward to better things. This is the half of the year, right? Is Babajide Atolagbe. He is a portfolio manager at AFRINVEST Asset Management. Good evening to you, Babajide.
Hi, good evening.
I trust you're good.
Very well, thank you.
All right. Lagos as well can be a part of the marketplace today. Well, it's always good to have your insight and input as well. Whatever it is that you think, has been interesting to you regarding our GDP and our debt. How do you think we can, what are the options we have in order to reduce it? And all that is what we'll be having a conversation about this evening. But you know what, talking about conversation, sometimes some people aren't certain what GDPs are or how to differentiate between it. So I'm just going to ask really, what is the difference between debt to GDP and debt service to GDP?
All right, thank you. Debt to GDP essentially means the proportion of a country's total output, as compared to the debt it takes. So see it like this, right?
Okay.
GDP in economics is essentially the value of a country, right? If you
Mhm.
say the GDP of a country is 100 billion, it simply means the country is valued at 100 billion. So
Okay.
debt to GDP means what proportion of that 100 billion is being, funded by debt in that economy. Meanwhile, debt service to
Mhm.
GDP is essentially the interest that is paid on debt, right, as a proportion
Mm.
of the entire GDP. And both metrics are used to, examine or understand the debt profile or the debt situation of any nation.
Okay, that's actually good to know. But you know, I wouldn't have actually looked at it from that angle, but I'm glad that you were able to break it down and make it even more simpler for us. But can you also help us understand the calculation that actually got us to 52% debt to GDP as at the first quarter of this year?
Oh, sure. So at the first quarter of the year, as at March, 2024, the
Hmm.
total public debt for Nigeria stood at
Hmm.
about 121 trillion, right? This
Right.
encompasses both, domestic debt and external debt. Domestic debt are debt that are raised from, the domestic economy. Meanwhile,
Okay.
external debt are debt that are raised outside,
Outside.
outside the shores of Nigeria, correct?
Mm.
So the sum of those two debts amounted to about 121 trillion, which
Okay.
highest we've seen in almost a
I like
decade.
the fact that you're smiling regarding this debt because
Exactly.
a lot
And
to unpack.
then
Please go
and then
ahead.
the GDP as at the same period for
Mhm.
Nigeria is about 58 trillion in Q1. So if you annualize it, which means you convert it from a quarterly number to an annual number, you have about 235 trillion in terms of GDP. So like I mentioned earlier, debt to GDP essentially means your debt all over your GDP, your debt divided by your GDP. So if you take 121 trillion divided
Yeah.
by 205 trillion, you have about 51.7%. And that's the 52% you see that is flying on almost all the headlines today.
So it is not like it was a fictitious number that just came up from somewhere. This is something that we've actually used, and then we're seeing this as it climbs.
No, it's not fictitious, it's life. I mean, it is what it
Yeah,
is.
because some people were confused about they were like, where did we get these numbers? Is it something that someone just came up and just put up? But, like you said, hey, it's in the headlines. But someone actually went through and did the homework and decided to share this information that, hey, it's not something fictitious. It's not something that we just materialize just to give the government a bad name. It is what it is.
It
But
is
yeah, you
public
were just.
information. It is public information. If you go to the Nigerian Bureau of Statistics website, you find Nigeria's, debt numbers published on a quarterly basis. You also find our GDP numbers published on a
Mm,
quarterly basis. So we should be expecting that of Q2 2024 anytime from now. So it's public information and it's real.
okay. All right. That's actually good to know. At the moment, we understand that Nigeria has a self-imposed debt limit. And at the moment, it's about 40%, while the recommended debt for, while the recommended ceiling from World Bank is about 55%. Then ECOWAS is 70%. So I'm just curious, what do these three debt ceilings mean for Nigeria?
Well, so I think it's okay. It would be nice for us to understand, why do we have debt ceiling? So we can
Okay.
put some context to it, right? So because you don't want the government to go on the borrowing spree, whereby they keep on borrowing money for virtually everything that they do, it
Hmm.
is very prudent and very, very good for countries, serious countries around the world to have, debt ceiling so that you can put some sort of fiscal, consciousness in the mind of public officials.
Hmm.
So we chose a debt ceiling of 40% internally in Nigeria.
Okay.
The World Bank,
Has has its
yes,
own
pegged 55%.
benchmark.
Yes, and 55% is largely for developing economies, right? And
Okay.
ECOWAS has 70%. So the major agenda behind this threshold is just to ensure that countries, when they are taking debt, they are pretty much conscious about the implication it has on the economy, and they are ensuring that they are not, biting more than they can chew, essentially.
Hmm. Okay. I'm just, curious. If you say we're not biting more than we chew, how then do we, make it such that we're in the clear at the end of the day? Seeing that we are in that space where we're part of the thriving economies.
So someone, you can take this argument from two sides, really.
Okay.
Um, I can tell you that, okay, although we have outperformed our internal benchmark, which is 40%,
Mm-hmm.
but the World Bank benchmark of 55%, we're still,
Trying to
closer
hit
to that. And
the
I can also tell you that if you look at the major developing countries of the world, or even the developed countries of the world that Nigeria, aspire to be like, most of these
mm-hmm.
countries have a debt to GDP that is way above, 50%. And I'm going to give you some numbers right now. So
Okay.
the BRICS region, which is Brazil, Russia, India, China, and South Africa, those guys are
Mm-hmm.
seen they are seen as the next, developed countries in the next in the next couple of years. And
Okay.
all of them have a GDP, a debt to GDP ratio that exceeds 70%. South Africa is 73%, Brazil 75%, India
Oh, wow.
80%, China 82%. So having a high debt to GDP ratio does not, essentially mean that the economy is struggling. It just simply
Okay.
shows that debt accounts for a significant chunk of what is driving the economy. But let's bring a twist to it now. That's from one angle. From another angle, if you say Nigeria's debt to GDP is not a cause for alarm,
Yes.
I will tell you that it signals that the country is taking too much than it can chew. For example, these same countries that have debt to GDP in excess of 70%,
Mm-hmm.
their revenue to GDP, right, is well above 25%. So and
Mm.
Nigeria's revenue to GDP, last I checked, is still within 9.6%, roughly 10%. So we are taking more debt, but when you compare it to the revenue that the government is making, we are lagging. We're lagging these countries. So someone can argue that we don't necessarily have a debt problem, but we have a
Okay.
revenue problem.
I like that. I like that angle. So if we have to plug in and make sure that we're able to meet up with what, because hey, at the end of the day, we're looking at how we're not necessarily going to well, as always, we're looking to remove debt, right? Because anybody who is owing is looking at, hey, I don't want to be owing anybody, right? But talking about the revenues, how are we going to measure up so that we're also meeting up with making enough that we can at least have a balance, so to speak, when it comes to the debts that we have out there?
Exactly. Nigeria's major revenue comes from, two major sources, oil and non-oil.
Mm-hmm.
A significant chunk of them comes from taxes. Okay. We're going to focus more on taxes.
Mm-hmm.
I think we really need to improve our collection system, right? We need to make sure that it's
Mm.
very, very efficient. And we don't have so many agencies and, trying to collect on behalf of the government. Why don't we just have a single agency that has, sub-agencies that are, doing the collection? That way it is much more direct, much more efficient, and much more effective, right? And in terms of collection, right, there's a saying, not necessarily a saying, it's backed by data that, a significant chunk of GDP um, is the informal sector, right? And it's
True.
very, very hard, taxing that sector because there's no available data
Data
and
to
it's not
actually
as
back that up.
easy as the formal sector. So we need to also develop initiatives that would help us, penetrate into that sector and be able to make the juice, make the best out of taxing those areas. I know the current administration is doing quite a couple of things on revenue mobilization
Effective. Mm-hmm.
through Taiwo. So I believe that with time and with proper implementation,
Mm-hmm.
we are likely to see some results in the interim. And also on revenue, I must also mention that Nigeria depends largely on crude oil
Okay.
for revenue, right?
Mm.
And if you notice, our production numbers has been,
It's been.
declining
Mm-hmm.
materially, and that is, that's not exciting, trust me. Simply means we're losing money to, either insecurity, corruption, inefficiency, managing those, production centers and what have you. So these are all the problems that we have that is eating into our revenue. So our
Mm.
debt problem, fine, we have the debt.
Yeah.
Nigeria is a developing economy. We really need to grow the economy. And in
Okay.
growing the economy, we need to take on more debt. But we need to also make sure that as we are, increasing those debts, we also need to make sufficient revenue to pay them down as we progress.
Okay. And that's an interesting angle to look at things for. But we'll definitely be looking at more hurdles that are actually holding us back. But let's take this quick breather. On the other side, we'll be talking about those things extensively, as well as trying to stay away from what's happening regarding taxes and raising so much that people start to come out and rebel and or what have you, like is happening or happened last week in Kenya. But we'll have all those conversations on the other side. Lagos, don't go nowhere. Just a quick breather, and then just about a minute, and then we'll go back in.
All right, great.
They always give me joy. That's why anytime when they cook like this, I can always see now what's no cube. Add correct vegetables inside. Ugu, takashe, oh my god. Onions. Oh, I know they cook. Can you make my pikin them? They always enjoy my cooking.
Daddy, I never will. I want more.
You see, now all your food with correct vegetables. Come sitting down with no cube. But that will get delicious taste. Today, chop better. Accessible, informed, connected. Our approach is going to take it into the market. Also, the same 3.1.
All right, going back in. All right, that's 2 minutes going past 5, and this is the marketplace. And you can be a part of the marketplace today as we are discussing Nigeria's debt as it crosses 50% of its GDP. And my guest this evening with me, who is, giving more insight as to what it is we need to put in place, how we need to make more revenue in order to balance things out, is none other than Babajide Atolagbe. He is a portfolio manager at AFRINVEST Asset Management. So when we're talking about before we took that quick breather, we're talking about the revenues and how we can actually make sure that we're able to, put a benchmark on where things are and improve. You were talking about how we need to improve on our collection of taxes, more or less. Looking at not overtaxing people, but making sure that we have a streamlined collection process where corruption isn't coming to fight us anymore. We're not looking over our shoulders that insecurity is a problem. But my major question is, what other forms of revenues can we be looking at? If we're not looking at oil, we're not looking at, I know you said non-oil, but what other things in general are we looking at?
Well, before I go outside taxes a bit, let me also mention that if you look at the structure of the economy, things are changing globally, right? A
True.
lot of businesses are now thriving on, without having physical, outings. We're also seeing a decent rise in traction in terms of the digital media space as well. And that is an area that the government might want to look at because we have people, Nigerians who are making a decent level of income, using digital media. And if you don't want to increase the tax rate, if you don't want to make the tax burden, much more, burdensome on, the existing businesses, you need to look for new businesses that are untaxed. By that way,
Okay.
once you expand the tax base, you are able to get more money. Moving away from tax, right? Um, if we look at how the economy or the resources of the state have been managed over the past couple of years, trust me, it has not been really really exciting. Nigeria has a couple of a number of assets, right, that are completely underperforming, and their underperformance is a result of poor inefficient management. So one of the things the government can also look at is also to privatize some of all those assets, so that they can, at least if they are not efficiently managing those assets, they can, sell it to the private sector, maybe retain some sort of, percentage, just to also provide
Like
oversight.
the public-private partnership.
Exactly. And then
Setting.
the proceeds from that sale can be redistributed to other critical areas of the economy.
All right, that's actually a good way to go. And talking about things to upgrade the economy and try to reduce our debt. I know that or well, I'd like to understand that within the states, right? Let's actually go to them. I'm talking about the state in Nigeria. We understand
Correct.
that they collectively spent about 123% on servicing debts within the first 4 months of the year, as opposed to what they did last year. How alarming is this? Or is this something that is just expected?
Well, I would say it is partly expected, and it also has some element of surprise, right? I said expected
Okay,
because
partly expected. I wonder why.
because
Please share.
most of the states take borrowings from domestic lenders as well as external lenders, right?
Okay.
And if you look at the proportion of debt that is taken from external lenders, it's about 50 to 60% of
Mm,
their books. And don't forget, just the currency devaluation would have caused an increase in the value of your external debt, right? Imagine you took
sure.
a debt that when naira was 500 naira,
500.
and
Now you're
paying back
paying
at
at,
1003, 1004. I mean,
if
the
not,
naira
if not even
equivalent,
higher.
thank you. The naira equivalent of what you're paying back, is almost, doubled or even
True.
tripled as when
Triple.
you took on the obligation. So the currency devaluation is a major, backstop to why you're having 123%. And
Mm,
then the second one would be that, since this new administration came on board, they have, particularly from the monetary, point of view, they have increased interest rates dramatically, right? Interest rate when, the new CBN governor came on board was around 18%, and now it's within the range of 26%. So, it costs more to borrow now than
It costs more.
yeah. So these two factors, has clearly put the states in that uncomfortable position that they're currently in now.
All right. Now let's even focus on something that has been a conversation for over 2 weeks or almost a month now, or thereabout. And I'm talking about minimum wage. I know that it's still an ongoing conversation between state governors as well as the federal government. However, what do you think about the ability of the states to pay more in terms of minimum wage with their current fiscal situation, where some previously weren't even paying the other one that they were, expected to pay? Now you're asking them to pay more. What's that going to portend?
Well, so again, right, for minimum wage, it's a very dicey issue.
Okay.
And I say it's dicey because both parties have strong claims, right? When I mean
Mm-hmm.
both parties, I mean the employer
Yeah.
as well as the employee. I mean,
Mm-hmm.
things have gotten so worse in the economy. The value of the currency has been eroded. So people are demanding for more.
Buying things are not
Exactly.
cheap any longer. So,
Not cheap any longer. People are demanding for more wages, and they have justifiable reasons to demand for more for more
mm,
wages. And from the employer point of view, he is also experiencing inflation. Output has not necessarily, expanded, but they also have to also pay those wages. So it's a dicey issue. And
mm-hmm.
if we look at the states, right? So for the state, we've looked at the data. About 60% of, the states have the capacity to actually pay, about pay that money because I think the last communication we had from the government was around 65,000 naira a month, right?
Mm.
So I think if you look at their numbers, they're able to do that because don't forget the state's FAC allocation has also increased because of currency devaluation.
Currency devaluation,
They
yeah.
they have more money in their pockets.
Mm.
But let's not forget that there are still some states that fall within the low income
No
states and
income states.
don't really have that capacity to pay. And
Okay.
I think this will lead to if it becomes legalized and we all have to pay the
That's
65,000
it.
naira. I
Mm-hmm.
think that some states might have to, lay off some, workers and
Mm.
to make sure that they operate efficiently. I mean, you might have two people doing the job of five people. It's just economic, rationalization. So that's likely going to be the impact. But states will pay.
Okay.
Um, I know some states that can pay if four, five, six times of that amount of money. So
Yes,
it's
because they
really
have the revenues that are coming in, so they can meet it.
correct.
Mm. Okay. Gilbert comes through and wants to, find out. Well, I'm just going to read what Gilbert says. It says, on the latest published figures on Nigeria's debt, what practical steps has government taking to ensure that the average Nigerian citizen has a significant purchasing power from 2008, where the stock market crashed in 2023? However, in his own opinion, he's saying that the government has done little, but what say you?
Well, the government has, I don't want to say in the best of their ability because I believe they can do better.
There's still more
Um,
to.
yeah, there's more to do, right? They've done a couple of things to increase the standard of living of Nigerians, but
Okay.
trust me, it has not been enough, right?
All right.
Because look at the price of commodities, price of bread,
It's
price of rice.
skyrocketed.
In fact, the last Salah is a clear testament of how things are expensive.
Very,
Um, an average RAM costing about 600,000 naira, 70,000 naira. That's alarming, right? So things are
very.
not exciting economically, and wages are not growing. Inflation is within the range of 30%. Food inflation is 40%. But don't forget, people are not making more money, right? wages are
That's
still
another
sticky.
problem.
So despite all the policies and actions that the government has been taking, if the people can't really see changes in their disposable income,
Mm,
it's always going to be a debate of whether they are doing something meaningful or
or
not.
not.
But I quite agree that a lot still needs to be done because if you look at the GDP per capita from 2016 till now, that's remains the same, which means Nigerians have not really you know increased in any form of economic wealth. That's a sad story.
But at the end of the day, what does this all mean for Nigeria's ability to actually even fund those capital projects that at federal level? What does that actually mean?
So
Would
it means
they have to cancel it out or have to keep pushing to some other time when they actually have the funds, or just cancel them out in its totality?
Exactly. You already mentioned some of those options that they have to take because if you look at how the budget is even being you know expended, right? In
Mhm,
2024, we're looking at spending 28 trillion naira, and about
mhm.
8 trillion is going into debt service, which is the highest chunk, right?
Mm,
Which have little to spread around. And then if you
all
look at
right.
that as well, a recurrent expenditure, MDA salaries takes about half of what is left, and then we just have about maybe 4, 5 trillion
Mm,
to take care of capital expenditure. And trust me, for a country like Nigeria, we have to invest heavily in capital expenditure for us to drive the inclusive growth that we need. So with a debt to GDP of 52%, and it is still rising. It
mm,
just that tells us that the government might not prioritize capital expenditure as they will
mhm.
always want to meet their debt obligations as at when they.
All right. So, you know how it is when you're having those conversations, especially this type of conversations where people are just taking notes down and trying to see, okay, so what's the next step I need to take? I want to actually find out from you. How do you see the economy playing out for the second half of the year? I
Well,
know I'm putting you
for
on the spot.
no, it's okay. For the second half of the year, right? So let me take I'll take about three macroeconomic indicators and then
Great.
based on them, right? The first one is GDP, right? So for the
Mhm,
GDP, I still think that there is opportunity for an increase. The last GDP number we saw was 2.98% in the first quarter, right?
mhm,
And business activities, although may have slowed, but compared to the previous year, I think we have done quite better. And most of all the reforms, the policies that has been taken by the federal government as well has also brought about an increase in spending, in investment, and and consumption. So all of these are likely to give us a much more favorable GDP. So for the second half of the year, GDP is still going to be stable. I don't see any
okay.
threat, any risk to GDP. Inflation, which is the biggest elephant in the room, inflation is still likely to remain elevated, right? Because there's still an element of pass-through inflation from the global economy.
Mhm.
You know, the PMS increase is still here. We still have
There's
electricity
that.
tariffs that have been, taken
Hmm.
out, and we're still in the planting season, so it's still inflation is still gonna be with us for a while.
Okay.
And the last will be interest rates. Or let me touch on the currency because that's something people like to
That's a
talk about.
that's like
So for currency,
uh,
I think the CBN has a good hand on the naira currently because
okay.
um, if you look at their intervention in the market since the beginning of the year,
Hmm.
they've been very, very proactive compared to the previous, administration. And even if we might not see a serious appreciation in the naira, uh,
Hmm.
provided confidence that we will not see something volatile, which means we will not see a 2,000 today, a 1,007 tomorrow. We will have a stable, currency that will enable businesses, plan very well.
All right. That's actually good to know that at least we have somewhere to look forward to this. As they say, light at the end of the tunnel. Gold at the end of the rainbow. So if we're going to be getting that goal, we need to put our best foot forward. Hopefully, at the end of the day, we wouldn't be looking at the situation that's happening in Ghana. But you know what? That's another conversation entirely in itself. Let's not get there before we rile
I mean,
ourselves up. We don't want to get into the debate of the jollofs.
exactly.
All right. Thank you so much for, all that insight that you shared today, and helping us break it down for us to get to understand what this whole GDP is, and breaking out what we need to look forward to the second half of the year. So how can people reach out to you if they have more questions to ask, and they want to get more insight on, investments, portfolios, and all that? Your social media handle, how can they reach out to you?
Okay, I think I can share my Twitter handle.
Please go ahead.
It's you, Babajaid, BABAJAID _ Babajaid, right? And if you want to reach out within an official capacity, you can just reach out to AFRINVEST. We can take it up from there.
All right. All right, Lagos. I trust that you've also got that as well. And thank you as well for being a part of Marketplace today. It comes your way every Monday. So for you looking out for those things that you're looking to invest, looking for how to put things in proper perspective, well, the Marketplace is that space for you to get all the knowledge that you need. But so much more to come through. I've got some music lined up for you. So don't go to West. That you just move 98.1. Okay, quick one, Babajide.
Yes.
Hi. I need your phone number itself and your email I want to get across to you personally.
Okay.
All right, please go ahead. Hold
090
on. Just hold